Hello, everybody. Welcome back to another episode of Robinhood Weekly. Roy, you want to tell them why we're late?
Yeah, it's because of this guy right here, Tanner. Always. I kid you not. Sometimes we kid. Tanner was late.
So even when Amit shows up late, I'm late.
It's true.
It's really
he would have been
sad.
here on
that,
time if not for you.
I could only imagine communists don't care about the value of time, and I think you're exemplifying that. It's really sad, bro. It's not a good thing. It's really not.
Yeah, and you're saying because I'm from Canada that I fit in the communist.
You can assume whatever you want to assume, but
Got you.
what I'm saying
If it
is
quacks like a duck.
maybe it's a duck. Maybe it's a late duck that is a communist. Who knows? All right, so we had a lot to talk about. Thank you, everybody, for being here. Robinhood's Gold event is on Wednesday. Tanner, Roy, and I will be there in person. We'll give you guys behind-the-scenes footage and content on our Twitter, so please make sure to follow everyone on Twitter in the description, but it should be really fun. We'll probably do a stream together, so we'll talk more about that. We do have a special guest today that I'm very excited to introduce because this person is someone whose investing opinion I really respect. They understand valuations better than pretty much anyone I've ever met, quite frankly. And they are able to paint a qualitative story with the quantitative backing to make that story make sense. This is a person who was not really a fan of Hood a couple years ago, and through the recent dip, I think took advantage of some of the volatility and started to get more excited about Hood. And so it is my pleasure to introduce a friend of the channel, Mr. Amir. Amir, thanks for being here.
Hey, what up? Hey, everyone.
It is a little early for Amir in Sweden, so we appreciate
I'm not allowed to complain. I was just chewed out backstage. I was like, man, it's 2:30. Like, stop complaining. I'm like, okay, oh, shit.
No, we told his European ass to stop complaining and just to work hard and chase your dreams the American way. But in reality, I'd be complaining if it was too.
No,
check
somebody
the
had a
chat.
if somebody had an excuse to be late, it was Amir, but he was here on time, unlike some other international person.
That's facts.
You know how every time I do something with you, Amit, we get this cross. Look at June's comment here. Hey, Amir. So we get this cross between my name and your name.
Yeah, a lot of people have called you Amir with an A. So that's...
Yeah, I think it's the Amit thing. Well, we're here. Let's get hype. Robinhood.
Yeah, so I'm really excited. I think we'll start off the conversation here, Amir. First of all, a couple years ago when you saw Robinhood, why was it not that exciting to you, and what has kind of changed from a macro company vision over the past couple of years that has now got you excited about the company?
I think what has changed is my understanding of the whole economics of the business. So let me just share a chart, which is what made me like kind of off-put from Robinhood in the beginning. Can you see this? So this is a chart of revenue specifically only from one market maker, which is Citadel. And historically, you can see that in the past, back when they just went public and started reporting on this, about a third of the revenue was only from Citadel. So Robinhood's whole revenue structure was a third from Citadel, and even worse, if we look at payment for order flow, it used to be 81% was strictly payment for order flow, and back then that was under a lot of scrutiny. If you guys recall, there were like congressional hearings, they were being grilled on this, on payment for order flow. So that was, I was like, oh, okay, this is a huge risk for the business. And typically, you guys that know me, you know that I don't really like having to depend on customers, because one bad headline and you can just switch vendor. Like, there's no real switching costs here.
Essentially, B2C businesses are not your cup of tea.
They could be if there's no alternative. And for Robinhood, we've actually gone through that. So typically, let's say for Celsius, if there's like one bad headline about Celsius, people can just go to another energy drink. Like, I typically stay away from that kind of business. But for Robinhood, they've already gone through like pretty much the worst kind of headlines you could have, and they've been thriving ever since. So that's my main reason. And also for payment for order flow, as you can see, it started to become less and less over time, but now has surged in Q4 back to 70% again. But it's not a problem for me anymore because the risk of regulation is like extremely low, because this actually benefits the users of the platform. Who it doesn't benefit is the market makers. This is like a race to the bottom. So you guys recall that we have Citadel here, which is the number one contributor from all the market makers. Typically, when we talk about PayPal and some other businesses, I know that you've been talking about this on this pod historically. The payment processing business is seen like a race to the bottom, where there are these payment processors out there, and whoever can offer their services for the lowest price typically gets the business, that kind of thing. So they're just undercutting each other over and over. The same thing is happening with market makers. And you can see Citadel is the number one contributing market maker, like consistently. And then there are a bunch that are less than 10% of revenues overall. But Citadel doesn't even market make a majority of the equities for Robinhood. That is Virtue Financial, which is another market maker. They are also the ones responsible for the 24 hours trading and stuff like that. So they market make like 50% of equities. Virtue Financial does, but they never cross 10%. And why is that? Well, if we look at this chart, this is the yield based on volume. And as you can see, this blue line here is crypto. And the green line at the bottom here is for equities. And remember, Virtue Financial does most of the equities for Robinhood. Citadel is like second place. They do like 25 to 30%, and Virtue does closer to 40%. But crypto yield is like 50 times bigger than equities. So what does this tell me? Well, it tells me that the equities markets are just so, what's the word? They are just so mature, so like perfected, that there isn't much spread opportunity. So it's not that attractive to market makers. All the money being made, and this is true for Robinhood as well, is here in like crypto, in options, where there is a spread opportunity, which is why someone like Citadel is giving Robinhood so much money, because that's really where their order flow matters. So before we get into like valuation and stuff like that, that's just like the core thesis was, well, payment for order flow is a large part, like 80%, 70% of Robinhood's revenue. What is the risk of that being regulated? And over time, I've grown to understand that, well, the risk is just extremely low, because it actually benefits all the users. Like, who it doesn't benefit is actually the market makers. So when I came to that realization, I started to look at the other streams of revenues, all the other financials for the business, and I'm liking what I'm seeing. So that's like what changed in my thesis, like just taking a look. Basically, I never like gave it the time of day historically, but I decided, okay, well, let's have a look. And yeah, I was very impressed.
Tanner, Roy, any thoughts on that?
Yeah, I mean, it's a little different angle than, the reason why I got into Robinhood initially. I was seeing it as highly cyclical, just as a trade. Now I see the long-term thesis, and there's no. That's one of the things about the market is people end up piling into stocks at different times for different reasons. So Amit and I saw Robinhood maybe differently, but we saw the same opportunity around the same time. Tanner was a little bit later, but he was not late by any means. And Amir, people might say, "Oh, Amir's late." No, absolutely not. This is a highly quality company, highly differentiated. I think they've built an excellent moat as well. You can see, like when you see margins and take rate actually continue to increase on companies, it means they got something there that the market appreciates. Not the market, but their customers appreciate and reward. That this isn't in danger of being a commodity. That is one of the things that people have asked me long term. They're like, well, aren't all long term all brokers just brokers essentially commodities? And maybe that's the case with equity trading, but there are so many products, so many innovations, so many new markets for Robinhood. Like they're just barely scratching the surface for TAM. So it's neat to see, this from a different perspective. So I appreciate that, Amir.
Are you worried? Obviously, whenever you look at equities, the pricing is so much lower, and crypto is beyond great, and they haven't, sort of found that top for how much they can price, and Coinbase is like 3 to 4 times higher than them on that. But Do you worry whenever you look at, certain types of revenues like that they could be potentially, I don't know, more cyclical than something like equities or maybe not as strong or recurring?
I guess the broader question here is, how do you deal with the cyclicality of the business itself?
You can't really get away from it when you're talking like about primarily a brokerage. I mean, they are doing a lot to diversify their revenue stream. So if I share this next chart instead. So yeah, as you mentioned, like the spread opportunities over time as that product matures will become lower and the yield will contract. Typically to what we're seeing with equities, maybe not to the 0.01% yield that equities has compared to the 0.5%, like 50 times larger. I don't expect that to be the case forever, but crypto is still relatively new. The options market is still not as widespread, but here's a different chart. So this is typically like ARPU, average revenue per user, that you guys look at and that Robinhood reports on. Using the same approach, I've looked at average interest earning assets per user. So this is one of the revenue stream diversifications that they do have that I expect actually to grow the fastest. So they have three main segments, Robinhood does. So one is the transaction-based revenue that we've been talking about up until now. Then they have the interest revenues, and then they have the subscription revenues, which is like Robinhood Gold and stuff. So what is interest earning assets, and why do I expect that to grow? Well, similarly, we can see that this chart is just up and to the right. But if we look at what this contains, it's actually all these different vehicles that they are earning yield on. So I charted up the yield across all the different ones. And we can see that a credit card is like recently launched and is yielding like over 10% on the assets under custody in that category, which is like insane. Like this is like the people who know my content know that I like to talk like mafia businesses. Like staying close to like 10% is like extremely high. I don't know how sustainable that is. Obviously the volumes here, like the yield is great, but there's not a lot of assets under this specific category. But next we have margin book, which is also quite high. Like historically it's been above 6%, now it's at 5.4. So as people take out margin on Robinhood, Robinhood gets a yield on that as a category, which is around 5.5% now. And then we have the actual cash that is being held and the deposits, which is also around 5%. This is one of the main ways that they can keep down the volatility in the revenue, is just farming yield on all the assets. And the assets are just, as we looked at here, it's just growing and then growing over time as more people deposit money, use their different products, and as they gain more customers, ultimately, I mean, they seem to have a global approach to their business. Like they are trying, like they've gone into the UK. I'm sure they will start to expand across Europe over time as well. And I mean, you guys have talked about this a lot more, so we don't need to get into a lot of detail here. But I mean, who's competing with Robinhood? Like they are above and beyond like the premier choice, like both for now starting to be for the traders as well that transact as well, but also like for the pure simplicity of the platform. Like who's competing with Robinhood on the innovation side? Like no one. So as they get more customers, you get this natural diversification of your revenue streams, but you won't get away from that cyclicality hit, because just like you are a brokerage, so you'll always have that transaction based cyclicality to it. So we can see that here. Let me just share one more chart and then we can discuss. So you guys know our ARPU. This I have calculated myself, so it might be like $1 off for some periods before you like yell in the comments like, no, it's wrong. Robinhood does rounding, so like one period here might be $1 off, but you can see the cyclicality hit here. But more so, if you look at specifically transaction-based revenues per user, you can see that like, okay, when there's a lot of activity in the markets, you see something like this, where you are towards that 80 to 100%. And then when markets aren't that hot, when people are hiding away in money market funds, they're not transacting as much, the yield is just so much lower because the market makers don't want to pay you as much money for that order flow. And this is not only equities. Keep in mind, like, equities don't make a majority of Robinhood's money. Like, it's purely options and crypto that do like a lot more revenue. But simply people weren't too interested to gamble on crypto and options. And some people might get upset when I say gamble in relation to crypto and options, but and we see that returning here. So you won't get away from that completely, but you can substitute it with a lot of, we're talking about like Robinhood Gold, a subscription-based revenue stream. We're talking about assets that are earning interest. So that will pad out the periods of drought, like when it's overall down, and that's just maturing now. It's still like relatively early, so I don't know what people are talking about when they say like, yeah, you missed out on Robinhood. I think this is just getting started, so still very young business.
Absolutely, and that's one of the reasons why I've not hesitated to, and I've stopped now. I've hit my threshold, but I've been DCAing into Robinhood, like not really caring where the price is. If it's higher, I buy fewer shares. If it's lower, I buy more shares. And when it really fell into the 30s, I'm like, now's the time to finish this out. So I got the position that I want, and it's above 10% in my portfolio now. Not all shares. I've got some spreads too, but mostly shares.
You said that they're very innovative. What do you think about the new products that they have been pushing? Obviously, you made some comments about the credit card, but potentially more thoughts on credit cards, event contracts, crypto, if that's another one that maybe you might think is also gambling.
I think I heard you guys. Like, I don't have any like moral issues with the event contracts. Opposite, like you are investing in Robinhood as long as it doesn't dilute the user experience, which is what makes Robinhood ultimately great, is just how intuitive the app is. From obviously I can't use the app, so I don't know myself, but that's what I can gather. As long as it doesn't dilute the user experience for all the other products, I'm not against it. Like, morally, I don't care. I think people are gambling away their money regardless in crypto and stuff. So from a shareholder perspective, I don't know like what kind of money they are making on, like, I don't even, we didn't even know if they are making money on the events contracts. Maybe that's just a way, like, I think they partnered with Kelshi or whatever it was. I think it could be that it's just a way to get more users on the platform, and you expect to make up that by having them, okay, they switch to Robinhood to use these event contracts, and then they start using the other products. Maybe that's the core idea. Or maybe there are some unit economics related specifically to event contracts, like, we don't know yet. Like, it's not tangible. So typically, as an investor, I don't put too much focus on things that are intangible. Like, I might have an idea, like, okay, why are they doing this? Is this a net benefit or not? But before we actually get the numbers on it, like, I don't really have a strong opinion for or against, but I can tell you that, yeah, I caught your guys' discussion last week, and yeah, I completely don't care about the user perspective. As long as the app is intuitive, go for it, and let people use it if they want to.
By the way, to add some context to it, so Josh, friend of the channel, he actually ran the numbers on this. He estimates Robinhood sold 95 million contracts in the past week and a half of NCAA. And based on the split with Kalshi and the commissions, he's looking at, again, rough estimate, 1.9 million in about 8 days.
Well, I think, I don't know if that is split. I think that's 2 cents.
Yeah, I mean,
he has 2. It should be 1. I pointed that out, and he was like, well, it's 2. So
okay, well, Josh is watching.
Include...
Josh, fix this shit. But the point is 95 million contracts, dude. Forget even the revenue. Like, that's insane, bro. 100 million contracts in 7 days. Like, talk about product adoption. Like,
yeah, I think some guys were scared that people weren't going to use this. Like, oh, what is this? It should be a separate app. I'm like, well, the numbers speak for themselves. People seem really, really excited to use this, and like, I'm all for them being. Well, I guess this isn't an innovation per se, but I mean, just finding more ways that people can start to use Robinhood's products is a net benefit to investors, because they will find a way to monetize that over time. And as I mentioned, like, this is just one other way of diversifying that cyclicality you have specific to the brokerage business.
Now,
And
Amit,
that doesn't include the women's bracket, which I know has a lot less volume, but there's still actually, surprisingly, especially in some matches, a lot of volume there. And I did see, a couple of people basically post and share the gains that they made from that. And then, like, I talked about last time why I'm neutral on the product overall, but like, people that are, if it's working for you, you're making money on it.
But now Roy is seeing that sweet, juicy revenue come in, and he's like, you know what?
yeah,
Maybe not
it
the
might
worst
be okay
idea.
after all.
That's no, but that's why I'm neutral. Is I'm like, hey, it's good for revenue. It's maybe bad for the brand. Overall, it's probably good. But I'm neutral.
This fucking paper gains Jason guy, I know he's in the chat watching. This mother effer, I think he's made like a couple grand over the weekend on sport. If you go to his Twitter, like I'm scrolling through it right now, every other post is literally screenshots, like they're freaking stock picks with college basketball. Like, it's insane, the product velocity. And he sent me a text, if I can find it right here, where he told me to buy the dip on Duke. Like, look at this thing. Look at this.
Awesome.
He was like, buy Florida. I bought it. Thankfully, it worked. So his intel was good. And then he's like, next one is Baylor Duke, but same setup as this game. Can buy Duke and close if you see green, but ideally buy the effing dip on Duke. I mean, like, come on, bro. This is one of those things that's becoming a cultural phenomena. I know right now it's March Madness. That's why the volumes are elevated. But if Hood can get this to expand to the entire concept of predicting markets, even if it's like a couple $100,000 a week of revenue, I mean, this is going to be one of those, this could pay for all the incentive matches. They make like 10, 20 million off this a year, right? So this could be special.
Do you guys know how dangerous gambling is? Are you starting to feel it now, Amit? Like, how addicting it is? And that's why you see people like in Vegas go there and lose their whole life. Are you starting to get it now, Amit? Like when you're exposed to it?
No, 1,000%. But I talked to Steve today. Steve's been doing this whole sports March Madness thing as well. Steve has a friend who he was telling me about today. That friend spends 17 hours a day. He's being hyperbolic, but you get the point. Studying these basketball teams. So like the average person that gets into it, like if I got into it and I got addicted to it, it would not be a good thing. That's why I'm staying away from it, because I just don't care enough about this. But there are people that legit treat this like they're studying stocks, which is what Jason was doing, going through all these stats on players. So I think there's a way for this to be productive, and it's no different to me than option trading in terms of the research you do. But there's also degens that get into it, but there's also degens that buy 0 DTEs. So to me, what's the difference?
And can you throw up the screenshot?
Yeah, and I agree. Like, just throw away your life as long as it goes into my pocket. That's why I said I have no moral issues with it. But it's like such a powerful product. Like, gambling as a whole is just so powerful. And people say that they are studying like slots machines as well to know like patterns and stuff. So no, whatever way you justify it to yourself, as long as I can make money off of it, that's fine with me.
I mean, honestly, that there are people that get into those superstitions with gambling, and it gets pretty bad. But it's you versus a company that is forcing you to play a game that's not in your favor. Well, not forcing you, but inviting you to play a game that's not in your favor. Aside from the spread here, that might be considered not in your favor, you can play both sides of this game. Like, so I don't look at it the same way.
Roy,
yeah, they're absolutely not a casino. I got a video coming out tomorrow on that. But yeah, this is one of those positive examples where this guy had made $36,000. You can see he even has some losses, but and he's recently unemployed, so he may be risking some that he perhaps couldn't afford to lose, but maybe he really knows basketball, college basketball, and if so, I'd prefer it. You just echo last week. I prefer this to be a product on Robinhood where you're not betting against the house, you're betting against other people. You can get out at any time, even mid-match. You can change your bet. You can take your gains. It's not locked in for a long time. It's the real market that's actually putting the odds on there instead of something else. So I'm never going to be like, oh, this is amazing and bullish. Like, the revenue is great, the product adoption is great. I hope the flywheel effect works. But if it works for people, like that's awesome. It's better that Robinhood does this than DraftKings, frankly, or casinos or
Which
the bookie.
they're doing it. DraftKings, FanDuel, Polymarket, Kalshi themselves.
Yeah.
You know,
Let me make this point real quick because I thought of this today, and I want to know if my logic is wrong here. So if I buy $10,000 of basketball contracts on Robinhood, I'm betting against someone who's buying the opposite contract with me, right? So let's say I lose my $10,000. That 10,000 is just leaving one Robinhood user's app to another Robinhood user's app, right?
it depends. We're not 100% certain of that, I don't think. Unless you guys have information that I do, it might go to a Kalshi user.
No, to my understanding, the volume on Hood is not Kalshi. It's only Hood. And I asked Josh about that in our DMs.
The volume of the numbers that they have are Robinhood's numbers. That doesn't mean that it's not routing out.
Okay, potentially. I guess we still have to confirm that. But let's say it's only Robinhood volumes because I think the election contracts were not Kalshi. It was just Robinhood.
Well, yeah, it wasn't them at all anyway.
Oh, yeah,
It was I forget the company, but yeah, it was a different company.
So let's say it's Robinhood versus Robinhood, or there's some level of other brokerages, but it's not that much. That would be the most amazing thing about this product because then assets under custody are not leaving the platform, they're being transferred. So if I buy a call option on SMCI tomorrow and Citadel sold me that call option and I lose all my money, that money leaves Robinhood and it goes to Citadel. It's off the platform. If it just exchanges hands on the platform, I mean, dude, like we don't lose that much AUC, even if people lose their accounts on this product.
That's that is a good point because I was also wondering. Obviously, how odds work is that like it's a scale, right? It tips one way or another depending on how the bets are. So it's not like 50% lose and 50% win. It's like no, the odds are automatically readjusted. So that's a good point. I mean, I was also curious how it works with the assets on Robinhood because we would just talked about how that it has been a net increase for like a lot of periods in a row, and then we see this like huge outflow. Like, yeah, I gambled away all my money on some college basketball. Like, what the fuck? Robinhood like Q1 earnings. Like, I don't know. People were gambling away their money. We lost all our assets here.
Yeah. And again, I could be wrong. Maybe they're routing to a ton of other brokerages, but we need to get clarification on, is the volume legit Robinhood volume? Because if it's Robinhood versus Robinhood, even if the amount lost, like $30,000 is incremental, if it doesn't leave the platform, I think that makes this product exceptional at that point.
You might be very close to asking that question. You might be able to talk to someone who can give you that answer.
Yeah.
All right. Aren't you attending something? Like I almost forgot. I'm like in the den of evil here because you guys are paid for shills for Robinhood, so I can't really. I have to be careful what I say. You might lose an invite if you ever say something negative about the business. That's why. Okay, I have to be careful not to drag your name in the mud here.
I was negative on the business for years. I only recently changed my mind, and that was Q1 of 2023 or whatever, whenever growth really started to pick up and it was just a completely different business.
It's because Amit won that debate with you and you were like, okay, I'll buy.
Yeah, no, he bought a year after that, but that was a good podcast we did. That was a good one.
There was a subpoena that ended up coming down on that product though, Amit. And please, guys, if you guys know the answer, do not butt in. Amit, what was the state that ended up putting that subpoena out? I'm forgetting it. What was it?
You know, I covered this today, so I obviously know, but it is.
I didn't cover it, so I'm asking you.
It's Massachusetts. Okay.
What?
Are you kidding me? I'm from Sweden and I know how to pronounce it.
It's the state with Elizabeth Warren who wants to take down capitalism.
What's the name of that state?
It's Massachusetts, bro. I don't know what you like. What do you guys want me to do here?
I mean, you know MIT. What's the M for? Can you tell us? What's the M in MIT for?
Massachusetts. Like, I'm not even trying to be funny. Like, I can't say this fucking word. It is what it is. But of course, this would be the first state.
Okay, let me give a try as a Sweden with an obvious accent. Swede with obvious accent. Massachusetts.
Got it.
Yeah.
Dude,
wow,
there's something with the S and the H on my lips. Ever since kindergarten, when Miss Wingo told me to step up in front of class and pronounce the word she, you might be asking, how does Amit remember this? Because I remember this, and I couldn't say she because I kept like messing up the S and the H. I think she scarred me for life in front of the class. And now any S and the H, it doesn't work. So it's Massachusetts. That's the
Imagine Amit, like this national level debater, goes up on stage like, okay, you have to argue for Massachusetts, and he's like, like finals in a debate. He's like,
like any state besides that one. But okay, so let's ask Amir. Let's get his take. What is your take on Elizabeth Warren trying to ruin capitalism for Robinhood?
I don't know. I just ignore all of that. I didn't even know about it. Like, I just ignore.
Okay, but as a new investor, so your answer is to ignore, essentially.
Yeah, I pay like zero attention to like political stuff in my investment approach. Like, I don't even look at the stock market as a whole. You should know this, Amit, but maybe some of the viewers don't. Like, I don't look at stock charts. I ignore macro events because I get everything implied from it in the 10-year yield. So I don't have to pay attention to it. Like, as Peter Lynch said, like, if you spend 13 minutes on macro,
that quote is stupid. So we'll move on from that. Quote is the
okay, but I think this is a little different. This is a direct allegation towards Robinhood themselves. So it could be a fundamental hit. Last time this exact person did this Bill guy, they had to pay us.
Tanner, who is this Bill guy? Who is this guy?
I don't know. Bill Galvin.
He's the Secretary of State.
Yeah.
Okay, so he did.
Wait, have you said Massachusetts? He's the Massachusetts Secretary of State, Bill Galvin.
Okay, so what is the implication of this? Do you think it's just Robinhood doesn't get to do this in
right now they're just seeking information. They said they want to know how many accounts have signed up for this. They want to identify the residents and stuff of each state that are using this. They requested to see the different types of contracts that have been traded so far. But Robinhood came out and they said, hey, we're following the law. And then even the CFTC came out and said, Robinhood's following the law.
Wait, really? They said that today?
Yeah.
The CFTC, they defended Robinhood.
A CFTC, well, this is from the article. A CFTC spokesperson in a statement said that the agency had concluded that it had no legal jurisdiction to prevent Robinhood from offering access to these contracts, which are listed on FTC registered exchange.
Wow.
Yeah, that was one of the crazy things to me is that there's a lot of people that, for whatever reason are sour on Robinhood, and they're like, what they're doing is illegal. It's like, by no definition is what they're doing is illegal. Now, there are, with the Kalshis of the world, the Polymarks of the world, the events contracts specifically, there's probably more regulation coming and more regulation that's needed. Some of that might be through the judicial branch. There's a number of cases out there as well. But currently, as the law is, you might at most say it's a gray area, but it is not illegal. And I didn't see that and catch that, Tanner. So I appreciate that. Them doubling down, because this is the same organization that put a stop to them temporarily on the Super Bowl contracts. They offered this and they said, hey, pull that back, please. And they're like, well, I thought we talked about this, bro. Okay, we'll pull it back.
You know what's also funny? I found this in the article, which I thought was quite interesting. The nominee to be the head of the CFTC from President Donald Trump was Brian Quintons, who served on Kalshi's board. And then Donald Trump Jr. had also served as a strategic advisor for Kalshi as well. So they got pretty close ties with big DJT, and Robinhood's a partner of that company, and the benefits that Robinhood sees are benefits to Kalshi.
Do you think they can use those connections to get rid of the suit?
I don't think that the suit is anything. I think that they're really just probing around right now. The problem that I have is, like, they did this last time. This Bill Galvin guy had a problem with Robinhood in 2020 and accused them of encouraging inexperienced investors to place risky trades without limits using gamification strategies. And Robinhood had to pay out $7.5 million to resolve these claims. Now, that's nothing, but it is weird that they can continue to just do this.
Wait, so in 2020, he said Robinhood gamified the market. Robinhood gave a parking ticket of $8 million to deal with,
including having confetti rain down for each trade made on the app.
And that's why we no longer have confetti. It literally is.
It's because of this guy, Bill
yes.
Galvin.
Yes.
I thought it was just Robinhood taking it away because they were getting too much like pushback on it.
How much revenue lost from removing that confetti, like that
Dude.
dopamine hit every trade? Like how
That confetti was legit, bro.
It might have been an encouraging piece.
But that's the most frustrating thing to me about this, that a lot of people that hate Robinhood for whatever reason, they'll say, oh, it gamifies the market. They're just copying exactly what mainstream media have said and what some politicians have said. And I'll usually ask if I get the opportunity, I'll be like, well, what makes you say that specifically? It's like, oh, it's like, no, I don't know. I disagree. So not looking to argue, but there may be some things that we're looking. What are you seeing? The number one answer is they use confetti, which is the dumbest, stupid answer. Plus, It's been removed for like 3.5 years. It's like, okay, you might be a time traveler. I'll give you the benefit of the doubt, but they do not use confetti. And then the number two answer that I typically see is they use emoticons. You may not know this, Tanner and Amit, but when you complete a trade, if you've set up your settings that way, you'll get a notification when it executes, like limit orders, stop orders, that sort of thing. And sometimes, not always, not often, but sometimes it'll have a, you did it. You executed the trade, like smiley face.
Yeah.
That's like one out of, like, I looked through, and it's in my video that's coming out tomorrow. I don't do much Dogecoin trading. I do a little bit, just back and forth, very small amounts. And I think one out of maybe like 20 trades has an emoticon.
Even if it was all 20,
that making it gamification? It's like the dumbest thing. Just
if they were smart, they would change the frequency of the emojis based on the types of products you're buying. So if you're buying Shiba Inu coin and Doge, like emoji it up. But if you go in and you start buying like value stocks, just not even congratulations. You have filled your purchase.
so on that, I think they do. I legitimately think they do, because I was looking, I was like, man, I don't remember many emoticons. And I had the first time I saw it with all my notifications was Dogecoin, which was like a month ago or whatever when I last traded it. Now, going back to 2021, I hadn't used my Robinhood as my main platform, except for like this last year. But back then they were using emoticons on almost everything. So again, they could be time travelers that, are coming from 2021 here and they're arguing against Robinhood. But these are old, tired arguments. And like looking at all my like PayPal and Tesla and Robinhood, like even buying the stock itself activity, zero emoticons. There was one exception. I'm not quite sure why. But I think they're doing exactly what you said, Tanner. Like, this is a company that's very agile, that knows when to pivot when they're getting scrutiny that they don't really particularly like. And when they're like, hey, it's a freaking meme coin, so who cares if there's an emoticon on Trump meme coins?
Let me wait. Not yet, Amit. Let me we get to that. Let me just clarify what I mean by asking you some questions, Amit, here. So, of course, it's a brokerage. They will be under scrutiny forever. They will never get away from that. I think there's probably a lot of suits that simply aren't public. I mean, it happens all the time. A lot of investigations happening all the time. Like, the reason I don't care for it until there's an actual decision, like I don't try to follow everything. So let me ask you, does the decision of this, Amit, change if you're buying or selling the stock? Yes or no? I would say probably no. Does it change your fair intrinsic value for the business? Yes or no?
No.
Exactly. So who the fuck cares? Like, let's talk about it after that decision is made. It's tangibly causing some sort of effect on the value of the business. That's when I care. Like, why should I, if I try to track every single investigation into like a brokerage, like I will tire myself out. Like, there is no end to this. Like, this will be constant. That's what I mean when I say, well, I don't really pay it attention, I don't track it 24/7. I of course care, to Tanner's point. Like, I do care. If there is an actual decision, I will assess how does this affect those two things. Does it affect if I'm buying or selling? Yes or no? And does it affect the fair intrinsic value of the business? Yes or no? And if so, by how much? Until then, I don't really care. Like, that's just my approach to it. And I understand it's like a weekly show. You are here to discuss these kind of things, but just to clarify, like how I typically approach this kind of thing.
So here I'd look through every single one of my SoFi trades. It's hard to see, but like right down here, you have two automated responses. One says hooray, and the other says I'd like more to place a new order. Those have emoticons, like, and you can click them in your response, and then it'll help you with that. Out of my hundreds of usually selling covered calls and buying shares, orders on SoFi, 0 emoticons except where it's my reply. How are they gamifying again? They're not. And even if they were, well, I don't want to spoil the video too much, but even if they were, like I use this example in the video that if gamification in and of itself is not a bad thing. It's a bad thing if it promotes a habit that is actually really negative. So it's like, hey, gamification and you're chugging alcohol and blacking out, getting drunk, that's bad. If gamification is leading you to exercise more and compete with your peers, that's a good thing. Arguably, long-term investment and maybe trading for some people like is a good thing, but they're not gamifying. It's just the dumbest arguments.
We might have some parents in the chat of young kids. Amira, I know your daughter's like 1 or 2 years old. Does she listen to Do the Veggie Dance on YouTube? Have you heard of the song?
No. Do you know the Bruno Mars song APT with
Yes.
that one is hot.
Okay. Well, the Veggie Dance has billions of views on YouTube, and essentially it's a song that attracts young kids to learn about vegetables. And Do the Veggie Dance means to like eat broccoli and all this stuff. It's like, so the point is the song figured out how to get really young kids subconsciously to like think vegetables are good, which is great for society. It's better that 3-year-olds think broccoli is healthy because of some song versus thinking that it's the worst thing in the world. For 20-year-olds to get interested in the markets because Robinhood has a slick UI, that's not gamification, dude. That's getting an entire generation into the modern era with investing.
Yeah, going like the other way, like if you go to Las Vegas or Reno, it's been forever since I've been there as a kid, but some of those casinos are really run down. It's like, oh, if you equate the building to a user interface, it's like, oh, because they have a terrible user interface, they're not a casino. Like, no, it's the dumbest argument. A user interface does not make something a casino or not. It doesn't make it gambling or not. It makes it nicer to use. And if it's a good product, great. If it's a bad product, then that, it's a shame, but that's the way the world is. So,
but I mean, there is an argument to be made, like hooking someone in. So let's say, I think like I used to gamble when I was younger, sports betting. So typically, when the house cleans you out, when you've lost all your money, it's very common to get a message like, okay, deposit again and we will match this amount of percent. Like they try to get you back into it. So maybe that's the argument, that like by having the confetti there, they are incentivizing you to like keep going, even though the confetti thing itself is kind of stupid. But I mean, that is a common tactic among gambling sites. Like they will try to hook you back in by incentivizing you to deposit more money after you lose all of it. So I don't know if that was the argument. I haven't read the like the actual decision hearing on it, but yeah, I get the point, but I don't get like the outcome of it and why it should affect confetti or emojis or whatever.
All right, time to look at this top secret chart. Yes.
Yeah. Sure, go. So before we get into the valuation, I guess that's why I'm here today, to share my evaluation, and you can disagree, we will get to that. But people are saying, like, I saw some comments, as you mentioned, I mean, people are like, well, isn't it too late now? Like Robinhood is, it's been going up a lot since the dip, it's too late. Well, I think that's the wrong framing for it, because if we look here, I have the Robinhood market share of US equities. So I take the US equities notional volume, and then I compare it to Robinhood's equities volume. And as you can see here, Robinhood has been surging a lot. So they were down in the 0.4, 0.5% of US equities market share, and now it's up to 1%. So as a whole, it's relatively tiny, and there's a lot of room to go of growth just within equities themselves. And I imagine that this is also echoed across different products. Like they also share crypto volumes. I haven't done the crypto market share, I'm sure someone else did that is more into crypto. I will do it over time, but for now, just the US equities, like 1%, which is still massive. Keep in mind, this is like US notional volume. So this is like all the global like brokerages and stuff. Like 1% is relatively huge, but it also shows like how much more room for growth there is. Like we are still very early. Like even in a mature product like equities, like we're still relatively early. We're talking like 1% market share. And my ambitions for Robinhood is like more like this global expansion, being the premier option across whole of the Americas, Europe specifically, like even who knows, like where's the stop? We don't know where the end is, but yeah, I would just wanted to make that point to the people that were like worried, like, well, it's a mature business now or whatever. I'm like, they just getting started.
No, I think it's a good point.
Yeah.
A lot of people sometimes, think they're late when in reality the market opportunity is just so gigantic. Just because the stock went from 6 to 50 does not mean you're necessarily late. Okay, so what's your fair value, Amir? What's your valuation?
I don't think we have time to go through everything.
We don't have to go through the whole thing, but give us a number. What's your intrinsic fair value right now?
Okay, so I will I tried to make a video on this today, but my OBS told me I ran out of hardware space. I did like 1 hour video, and then I look on my OBS and it just stopped after a few minutes. So I will try again tomorrow, so people can expect like where I go through all the numbers like in detail, because it is quite like I can share it. We don't have to look at it now, but I can share you, like, you need a narrative to each number or it doesn't make sense. So this is my valuation model for Robinhood, where I look at all the different type of revenue streams. But my current fair value, like I don't have time to go through all of this, it will take an hour. Trust me, I know how. My current fair value is $58, and that is accounting for quite a lot of risk to the cyclicality. But yeah, 58, close to $60, roughly that range, after going through all the numbers and forecasting it. And if you're curious about how I view a certain segment, like how do I view Robinhood Gold, how do I view, like, just catch my video tomorrow, and we'll have a lot of details on that. But yeah, roughly, as of right now, like a valuation model only reflects your understanding of a business. According to my understanding of Robinhood right now, it should be worth intrinsically around $60 per share to me. Okay. And just as a summary, over a 10-year period, I can just go through the CAGR numbers. I have transaction-based revenues growing at 18.3, interest 18.6, and subscription revenue 14%. So as a whole, revenue CAGR at 18.2% across a 10-year period. Because keep in mind, when you're doing a forecast for a business like a brokerage, the implication is that you're essentially timing the market, you're predicting the market, and as we all know, that's not possible. Like, you can't predict markets. So what you have to do is you have to normalize the periods. As you can see here, I'm gonna zoom in. 2023, like, transaction-based revenues were down 4% and then up 110%. That's the cyclicality that we're talking about, and you can't predict this. So what you have to do is you have to normalize. So when people see, Amir, you only have 23% transaction-based growth in 2025, but they just grew 110%. How is that possible? Well, you have to normalize the periods, because we don't know when this hits that they have like a minus, and we don't know when it hits that they just double. Like, that will happen across this forecasting period. We don't know when. So what you have to do is you have to normalize it, or you are essentially timing the market, and we all know how fruitless of an effort that is. So yeah, growing free cash flow to the firm at 20% CAGR. So the implication there is that they are growing increasingly more profitable over time, faster than they are growing revenues by some degree.
I love it.
Is a quick summary, but yeah, it doesn't really tell you a lot. So I definitely recommend catching the video tomorrow, where we go through everything step by step.
Yeah, I've seen Amir's valuation videos. His YouTube is right there if anyone wants to subscribe and catch that video tomorrow. I think it will be probably one of the best valuation videos on Robinhood because he really goes deep into the projections and numbers. So 58 a share. Are you buying Amir at all at these levels, or?
I bought. I kind of got ahead of myself. So what I did during this market downturn is I consolidated my portfolio into only 4 positions. One of them being Robinhood. So
Wow,
I think
Robinhood made the top 4. Wow. Huh.
Okay, so the reason isn't just what I just went with the 4 highest quality businesses, because my portfolio, like all of the businesses, are of high quality, like high barrier to entry, wide moat, you like all of them. But some of them took unjustified, like severe hits, while others like barely moved at all. So what I did was I consolidated out of high quality businesses into ones that were unjustifiedly like severely burnt, and Robinhood is an example of that. So I just consolidated all my positions. So Robinhood right now, I think after it went up, I think it's roughly around 50% of the portfolio now, which is not what I want longer term. But I kind of went a bit crazy. I got too excited. And my wife has had Robinhood since like the 20s. I was like, no, fuck if that. But she always beats me out on the averages. I think her Palantir average is like 5.9. Like she got the absolute bottom. But the funny story here is about a year or two ago, for me holding Robinhood, I just wrote. We have a group chat, me, Amit, and Arnie. So for fun, I was like, well, Amit, everything feels kind of overvalued. What should I buy? Give me some financial advice. And Robinhood was trading at 8. He's like, bro, buy Robinhood, ride it to 12. So I bought Robinhood, I rode it to 12, and I sold.
Because I knew you wouldn't hold on for the long term because you didn't believe in it at the time. So I was like, well.
No, but I mean, it was just like 2K or something like that, where I was like, well, this is this month's deposit. I don't have anywhere to put it. So Amit, for fun, where should I put it? And he said, Hood, at 8. Imagine if I looked into Robinhood to this degree at 8, what kind of gains I would be having. But yeah, so Amit told me to sell at 12. I sold at 12, and I need some reparations here, Amit. So
to be fair, even if I told you to sell at 12, Arnie was in that group chat who was pounding the table on Hood as well.
Yeah, that's true. And the funny thing is, it went from 8 to 12. I sold. It went back to 8, like shortly after. I bought it again and rode it to 12 again. So I rode from 8 to 12 twice. So I had 2 chances to have an average at 8. But no, yeah, I would be buying here if it wasn't already like 50%, which is no. Sorry, it's more like 35%. To be fair, and I would, if I didn't have a position, I would be buying today as well. Yeah, I'm completely fine with that. It's roughly 20% up to fair intrinsic value. And as you will know in my video tomorrow, I'm fairly, like, I'm not overly bullish on anything, especially when you normalize numbers. There's a lot of what we call optionality. So there's a high risk, not risk, high probability that they will outperform many of these forecasts because I have normalized all the numbers. But so there's a lot of upside, but I'm not paying for it. I'm only paying for what's in my model. So let's say that I account for a lot of risks and its fair value is 60. So I buy up to 60, but the actual fair value without this excessive risk, like caution, might be 80, but I'm not paying for that 80. So there's a lot of like upside within the actual valuation that I get essentially for free. So as an example, just so people can visualize, with Palantir, when it was trading at 8, you were only buying the government side of the business. You got commercial for free, because if you value each part, like the commercial side and the government side, you get a value for each, and you're essentially only buying government. So everything that commercial did, all the output from commercial was free at that price. So similar concept here, where I get a lot of upside for free. And same with Tesla. In my Tesla valuation, I don't assign any value to Optimus. Whatever Optimus does, I get that for free because I'm not paying for it. So similar concept here with Robinhood. So yeah, I would be willing to buy. Long answer to a short question, but yeah, I would be buying here.
Didn't you have a similar take on PayPal? Any growth that they were to see was completely not priced in?
Yeah. Yes. Where if you forecast 0% growth for the cash flows in the 60s range, I don't know when I did this, it's probably the same. I think me and Roy did this exercise recently as well on a joint live stream, like PayPal monthly, whatever. But yeah, even if they grow 0%, and you just forecast the same cash flows each period, like they would be fairly valued. So anything they do just adds to that intrinsic value, and you're not paying for it essentially. So that's why PayPal is one of the like safest bets in the market right now, according to me. Like it's so rare. Like people don't understand when they look at something like PayPal, like, oh, a value trap. I'm like, it's only a trap if the whole business disintegrates, deteriorates, but that's not happening. They are actually growing, but it's not priced as if it's growing. It's priced as if it's going to be stale for like a 10-year period, which is just not happening. So that's why PayPal is such a safe bet in my portfolio. Like, I'm not trying to tell you to do anything, but just looking at it from an intrinsic value perspective, which of course markets don't always respect it on the short term. Like markets do what markets do. But it just helps me sleep well at night to know that, like, well, if you actually look at what the business is worth, I'm not paying like for any growth. So they don't actually have to grow for this to be a worthwhile investment for me. So
let me ask a question here. I think this is a kind of good self-reflection as well. So when we were talking about Hood back at $8-12, you were more bullish on PayPal at the time, I remember. Obviously, Hood, multi-bagger, PayPal, just stuck in the gutter. What do you think was the difference there in your mindset for thinking PayPal would perform better than Hood at the moment? Was there anything specific?
No, I don't think along those lines a lot. As I mentioned, I don't look at the stock market. I don't know. Like, if you told me that both were flat, I would believe you. Like, well, I obviously I know that that's not the case, but I don't look at like, I lost out here. Like, my investment approach, which is like very peculiar. I know not many people, if anyone, does it this way, but it's just what helps me sleep well at night. And at the end, when you're an investor, you need to be able to pass the sleeping test. Can you go to bed without worry? And because of the work I do and the way I invest, I always sleep well at night because I know what I own. I know what I paid for it. I know what it should be worth. So no, I don't think like, or for Palantir, for example, like the last time I bought Palantir, like a major chunk was like in the single digits, but it went up to 120. So aren't you mad you didn't buy a lot at 60? You would have doubled that position instead of holding PayPal. I'm like, no, that's not the way I view it at all. Like, we don't know what the markets will do. Obviously, it's easy in hindsight. Like, if I did the work on two companies at that time, I didn't even look at Robinhood. So how can I hold it to myself that I missed out when I didn't even take the time to actually study Robinhood at the time? You could even tell me like, well, why didn't you buy Nvidia? Well, I didn't look at an Nvidia. I don't have an opinion on it. Like, you can't
the only reason I'm asking
lost money.
The reason I'm asking is they're both fintech. So that's why I'm just like, did one brush your radar over the other, you know?
No, I just didn't look into it. So, but no, yes. I don't feel that way.
So I can answer, the scenario where PayPal would outperform Robinhood. I don't think it's likely. I think Robinhood will. I'm a holder of both. They're both large positions for me. Like Emir said, I think PayPal is safer. Robinhood is very cyclical. I think there's a lot more reward, but there is more risk for Robinhood. And we all agree it's a cyclical company. And so if, over the next, let's say 5 years, I don't know if you said 5 years or not. I really do think PayPal probably hits an all-time high by 2030. Robinhood, I think, will probably outperform that. But, hypothetically, if we have the last year I invested in Robinhood, a little bit more than last year ago, seeing the golden thesis, golden confluence of high interest rates fueling more deposits on Robinhood, along with a bull market for equities and a crypto bull market as well. If we get the opposite with Robinhood, like towards the end of that 5 year, like let's say the last year of that 5 year, that you have very low interest rates, a bear market, and a crypto winter, which can happen all at the same time, that's going to be painful because those year-over-year comps won't look good. People sell out of Robinhood. They'll get out of the market. It's not as cyclical as it once was. It'll still do fine, and over the long term, like it's going to do great. But it just depends on the timing of that. So there is some point where you're going to look at and be like, "Wow, PayPal has outperformed." I think PayPal will do well, but Robinhood, yeah, it's a fantastic company to be in long term, even though it's cyclical.
So just to make a point to admit, so let's take Robinhood and PayPal specifically. For me, PayPal has something like 80% up to its fair intrinsic value of roughly 125, 130 to me. And we just talked like Robinhood only has like 20% up to fair intrinsic value. So if you gave me a clean slate portfolio, I would allocate more to PayPal than I would to Robinhood, because I believe, to me, up to fair intrinsic value, PayPal has a longer like run rate than Robinhood does to fair intrinsic value. Does that mean that I expect PayPal stock to outperform Robinhood? Like, no, as I mentioned, I don't know what the stock market will do, and no one does, or we wouldn't be sitting here on YouTube. We would be enjoying private islands. So obviously we don't know. I can just risk adjust my portfolio according to my understanding of different businesses. So even though PayPal is more undervalued than Robinhood, it doesn't mean that like I expect PayPal to outperform Robinhood or vice versa. Like, we simply don't know. And I know one thing is that Robinhood is a lot more attractive because it has this growth factor to it. So typically that is rewarded in the stock market, but you also get this volatility. Like, it dropped, I don't know, like 30-40% in this drawdown. Who's to say that it should retrace immediately? Like PayPal, it dropped, but it didn't drop like nearly to that degree. So I mean, you get all this volatility back and forward. So that's why I always choose to just ignore everything. I just look at my valuations, and then I get a stock quote, and I see, okay, this is my fair value, where is the stock trading, and then I make decisions. I don't like track if the stock chart is going up or down, because you never know. Like, I never pay attention to that, for me personally, and that's how I sleep well at night when I'm investing.
I think that that's a great strategy. But what do you benchmark yourself to, if it's not, other companies that you could have potentially invested in or something like this?
The S&P 500, but even that I don't look, because I'm just outperforming it by such a degree over so many years that it doesn't really give me much to bench it, But if I would, like, I made some, like, as a YouTube challenge thing, I made like this YouTube portfolio, and we bench it against the S&P 500, but it's still like outperforming by 5-6 times. So I don't really pay attention to that. So
that makes sense.
It's just like I just do it out of passion and because I like it, and I don't know. I don't bench myself against anything really, but if I were to do that, it would be against the indices, of course.
I get everything you're saying, and it makes sense. The only pushback I would have is on Hood, there's a level of creativity I think an investor needs to see into the future what they were willing to do. And in 2024, I don't think Roy, Tanner, or I expected the level of execution that they had. But there had to be a little bit of like, all right, I believe in Vlad. I trust this. I use the app every day. Maybe they're going to introduce new stuff. And then they just kept pushing out product, which was different than SoFi and PayPal, right? They just didn't have the same level of execution. And so that is hard to factor into any valuation model, but it could be the difference maker.
Amir, do you have thoughts on SoFi?
No, I actually invited, and I'm going to call you out here. I don't know how many messages I've sent you on X to come and talk to me. You always say like, yeah, sure. Yeah, let's do that. And then like, okay, well, when are you available? And
Tanner's like, lazy, bro.
So I made a personal decision. I'm never messaging Tanner again to come on the channel, because I've just been ghosted so many times. Like, it's not even.
All right, so now you are peer pressured and having to show up to his channel.
And the same thing happened with our friend. Is his name?
DDI, data driven.
Yeah.
He has 5K. That's different. There's a difference there.
He has said that he's willing to come and talk to, and I told him, okay, whenever you are available, come on. I will do some prep work. I never looked into SoFi. if he's willing to come on, I will do some work on SoFi, and then we can discuss it back and forth. But no, I don't have any.
He has an excuse. Tanner has zero freaking excuse.
No, I do
Yeah.
have any. It just got bogged down. I forget what
Yeah,
exactly
yeah,
it was.
yeah.
There was a weekend that was open, but then the time zones
Yeah.
weren't lining up.
Yeah, and keep in mind, it's been like a year. He's had a year to sign that
It
time
was like
slot.
2 messages. It was like
Tanner
2
got
messages.
bogged down for a year. I love it.
Tanner
Yeah.
is really late to responding.
Tanner is really late to everything, to be honest.
Actually, oh man, you're gonna miss the Robinhood summit, Tanner. Somehow you're gonna be late to it, and
Weren't you late on the last flight, Tanner? Going to Robinhood's Miami event?
No, let's not start creating
Oh, I
conspiracies.
thought you were.
Okay.
I don't know. Also, why did you schedule your? Steve told me your flight's early as hell in the morning. Why did you schedule that early of a flight?
So I could sit in a coffee shop and enjoy San Francisco. I want good weather. I'm sitting. It snowed today. I'm done with it. So
It's cold in San Francisco. I'm telling you.
It's like 70 degrees tomorrow in San Francisco, and
Oh, really? All right.
Tanner and I should get in the airport around the same time. Close, but I know his flight is going to be late. I already know that. But we get more time with each other, and you'll come in a bit like at midnight or whatever time you're getting in from.
Oh, I'll be there by 7 p.m.
Can you guys share the shilling strategies with me in DM so I can also get a flight from Sweden to attend one of these Robinhood events? Vlad, if you're watching, I'm gonna shill your company. Don't worry. No, I'm just kidding.
and anyone can get a ticket.
I'm totally not jealous, guys.
Well, me and Arnie told you at 8. We were like, dude, just hop on the bandwagon.
Why is Arnie not
But
invited
this
to this?
fucking PayPal thing, bro. It's like I'm like, all right. Well,
Yeah.
here we are.
Here we are.
No, but it's so crazy that it's 50% of your portfolio right now because that's how dramatic the volatility
Okay,
is.
it was like 35 to be fair.
Okay, but no, I'm talking about Hood right now. You're saying it's 50%. Like
No,
that's-
35.
oh, 35. Okay.
I revised down.
Wait, so
after
are you
some
thinking
internal
of,
calculations?
are you thinking of underweighting and going back to like 10%, or how are you navigating this surge in the portfolio?
This probably it will even itself out because I won't be adding to it, and I will be adding to a lot of different, like, I don't know about portfolio management. Like, I like when everything is crashing. It's very easy to make a decision like, well, this is undervalued and this I like this, I like it, I like this. When things are mooning, that's when I don't know what to do. Like, I'm not
Same.
comfortable when things are green. I'm like, what am I supposed to do here? I'm not comfortable at all. I like when I see opportunities, but just prior to this crash, I was sitting and discussing with Arnie and some friends. I'm like, dude, I don't feel like there are any opportunities in this market. And then 2025 came, Trump volatility came. I'm like, okay, we can actually start to make some moves here. So yeah, I don't know. I might sell out a portion depending on if it gets very overvalued. But typically I like to just let quality companies just be. Like, I don't like to sell. I just let them be, and it manually adjusts over time as I add to other positions. So I don't like selling stock typically.
Okay, last topic for the day. We have the gold event in 2 days. Vlad's posting a lot of hieroglyphics. Roy, what the hell do you think is happening?
Well, I thought this was interesting, and I don't want to go into like too much as far as what this is, but did you guys see the first reply under this?
Yeah. Yes.
Wait, what is it? I didn't see it.
That guy.
I did not see that. That's great.
Yeah.
Great.
I mean, they were both at the crypto summit at Washington, D.C. They obviously probably knew each other before. I just thought that was fascinating. So, yeah, this isn't the crypto event, but if you remember the fireside chat that Vlad had a couple of weeks ago, he was talking about how he used the word giddy. He said he gets giddy over the agenda. Not for this. I think this is going to be an awesome event. It's going to be a lot of fun. They'll release some awesome things, but specifically about that crypto event that's coming up. And I'm like, I hadn't planned to go to that one, but man, I might just have to figure out a way to get there. So,
Are you guys excited about the location?
France.
San Francisco.
No,
Where
in
it's at?
San
Yeah.
Francisco. I don't think it has
Yeah,
been said
we
publicly.
can't say the location, but it is.
Yeah.
Dude, I found out today. Actually, I was like, I realized today what it is, and I didn't realize that's how cool of a location they're doing it at.
It's a little weird that
They're
they're
so
doing it in
gangster,
Alcatraz,
dude.
but
Honestly, like they're so cool.
Yeah.
Like,
do they pick
yeah.
the best locations? They really do. So
That is, you couldn't have named a better one for. Yeah,
it's perfect.
Yeah, people will really love it. It's gonna be. I think they're gonna throw. So okay, so what are we expecting from the event? What are we expecting? Like Amir, I know you kind of just got into it, but do you have any idea? We got the 3% credit card last time. Like anything you're thinking?
Probably something as we talked about. Ways just to diversify their revenue stream, so unrelated probably to transactions, so but finding ways to monetize their current user base, because that's one of the most important key metrics, is just like on a per user metric, like how can we monetize our users, and they've been doing that by releasing a lot of different products. So I hope it's another way to gamble for all of you guys, so you can make me more money. That's what I'm hoping.
Okay, Tanner, what do you think we're gonna get? Or any ideas?
the portfolio, multiple accounts, portfolio breakdown stuff, the investment pies. I think that they kind of gave that away pretty easily. Hopefully, some stable coin stuff, something along those lines would be very interesting. I know that they have partnerships that they've not disclosed yet. Yeah, something along those lines. I'm not sure. Platinum Desk rolling that out. We've already seen some customers get reached out to by the Platinum Desk, see if they need any help. But yeah,
Do you know how early we are when like this is such an innovation to have your portfolio in a pie? Like, do you know what kind of level we're talking about here? Like, oh my god! Like, do this event, fly out all these influencers, and we're gonna have this like, you can put your portfolios into pies. Like, multiple,
I think
more
the main
than
thing is
one
just
portfolio, guys. Like, come on.
It'll be a lot.
multiple broken down accounts for different trading strategies. As small as it is, a lot of other brokerages don't offer it. You know, so
Exactly, that's what I mean. Like, I wasn't ironic. I was like, do you know what the level we're in?
Yeah.
When this is like a breakthrough. So I wasn't ironic at all.
But by the way, the 1% match that they announced is our last little bonus over the gold month now instead of gold week. Was that the first crypto match that you guys have seen, like, period?
Yeah.
Oh, we didn't even
First
talk
one
about
I've ever
that.
seen.
The crypto match, right?
Yeah. I like, I'm sure maybe there's a company out there that's done that before. I don't remember seeing it. I thought it was pretty interesting. I didn't bring all my crypto over to Robinhood just because they don't have staking. I still like self custody, the not your wallet, not your crypto, not your key, not your crypto, that sort of thing. But I did move all my Bitcoin over. So
Really? So you got 1% on your Bitcoin?
yeah.
And did you see the payback or the how long you have to keep it locked up, Amit?
No, I don't. I actually don't know how much.
1 year.
Wow.
Not bad.
So the equivalent, because it's only 1%, would be 2.5 years on equity. But it just goes to show you how much more they're making. Like you could see it right in their take rate, but I think that their take rate's still going to continue to climb. I know Amir said there could potentially be over time some compression, but their competitors are 3 times higher than them, some even higher. So they've only been going one direction, and they have been coming down. So by the time they meet in some sort of median here, and then start the market starts to find better pricing, this will be years and years and years down the line.
I'm
Yeah,
really
and,
wondering.
I mean, yeah, and as I mentioned, like it has been increasing. Like it almost like it went from like 0.34% to like 0.5 this last quarter, and it used to be 0.1. So they're like 5x over a 3-year period. So I think there's still a lot of discovery to the upside to see where the pain point is before they actually start to normalize and consolidate. So I think crypto will be very, very lucrative for Robinhood for quite a while to come, because the others, like as I mentioned, like the pie thing being like this huge breakthrough. Imagine like crypto across all different brokerages, and not only in the US but globally, or like UK and stuff. Like it doesn't exist here. Like there's just 2 players like available to like the normal average American or European. Like it's Coinbase and Robinhood. So yeah,
So-
a lot
so-
more.
As far as the payback period, like being a year, I thought it was really interesting because as an investor, as a consumer, I'm like, hey, this is awesome. As an investor, I'm like, okay, so usually for most products, for each 1%, it takes them a year to pay off. With like Bitcoin and other cryptos, like they're not doing staking. They don't have that. They're not doing crypto lending. I'm kind of curious if they're announcing a new product either at this event or probably more likely in the summertime. Like maybe one of those things that it seems like they might dabble their toe in is lending, and they would be at a disadvantage to the banks just because they don't have a banking charter on a lot of those traditional lending products. But one that they would not be disadvantaged in is crypto lending. And so they could do something. There's a lot of different ways you could do that. One of the simplest is something like the cash sweeps, but more basically giving you just a yield on certain tokens that could be different depending on the rates on each token. But it feels like there's something coming. I don't know if it's from this event or this summer that will make that 1%. Because it's, if it was just about getting assets under management, they'd make it 2 years or 5 years or whatever. Because people are like, hey, this match doesn't happen very often. So I'm very intrigued by that time period.
Is it 1% cash, Roy, or in Bitcoin?
Legitimately, it doesn't matter.
But what do? They give it in cash or
Probably cash.
I think it was Bitcoin actually that I got.
Oh, so wow, they match you with Bitcoin, huh?
Yeah, I'd have to look again.
Wow.
It literally wouldn't make a difference. You just buy the Bitcoin the second you get the cash.
Yeah, that's fair.
So when you're going to this event, can you ask Vlad why the hell he would just stop reporting safeguarded user cryptocurrencies suddenly? Like, we don't have numbers for Q4. What the fuck is this, Vlad?
So I'm not
why
going to
do you do
ask
this?
Vlad this question.
Yes, you should Vlad, forget everything. This is the most important. Why do you suddenly just stop reporting on stuff in Q4? Like,
I'll
typically,
ask him to
you
continue
finish out
not
the year.
reporting on that.
Man, it pains my heart. I might have to sell my whole position. Like, I don't like when they just stop reporting. No, I'm just kidding. That's kind of insane. Why do you guys think they did that? They just stopped reporting how much crypto, like which specific crypto they are safeguarding for the users. Why did they do that? And typically, companies start or stop reporting on stuff like annually, so they would at least finish out the quarter and then stop. But like just stopping like Q3 in, like what? Why?
I mean, I'll
Why
ask you the
is
same question. Are you going to sell because of this?
Yeah, I'm heavily debating it. I'm gonna,
I didn't even
I'm
know
gonna
this was a
put
metric
coin-
they reported, dude. I'm finding out today.
Yeah, I can tell you that as of Q3, 48% of all the safeguarded cryptos was Dogecoin, dude. 48%.
What is a safeguarded crypto? What is that defined as?
Like their assets under custody, and they have equities, they have crypto and stuff like that. So if you take crypto and then you just look at, okay, what cryptos are we holding for our customers? 48% of the customers are holding, like of all the crypto is in Dogecoin as of Q3. And only 21% is Bitcoin, 21% was Ethereum, and 10% was other. So like, I guess,
Wow,
crap
that's a lot of
coins. I don't know.
Dogecoin.
Yeah, 48%, but it was 21, so there was like some surge with the Trump thing, I guess, in Q3. But still, like, why just stop? Yeah, everyone go sell the stock. This is unacceptable. I'm just kidding. Yeah.
By the way, it is a cash match that they provided.
That's what I thought. That's what I thought they would do. Okay, cool. I don't think we have anything else to touch on. I'm excited for the gold event. Tanner, Roy, and I will be there in person. I don't know what to expect. All I know is I'm so happy they've committed themselves to a culture of execution. I mean, it's hard-earned money that we're putting into the stock market and then putting into Robinhood specifically. So to know that they are working their ass off to just keep pushing the envelope, regardless of what happens to the stock, like that tends to be a business that wins over the long term. So I think they're gonna announce some cool shit, and hopefully the market will react to it over the long term.
Yeah, I'm so excited, and hopefully they continue to do these because it keeps up a high level of, push from the team. They have to get things done. Where I think other companies, I'll call SoFi out here, I don't think they put very hard deadlines on some of their launches. So, yeah, level 1 options.
Hypothetical debate somewhere in the multiverse. Topic: Massachusetts is the best or worst state. Moderator Amit, you have the side of the best. Amit Atkins. Yeah.
That user could have tagged me. I'm kind of upset, but
That's-
it was my joke that he stole. But okay,
He couldn't find a mirror.
Amir with the A.
Yeah.
Yeah.
All right, Amir, we want to thank you for joining the show. Really appreciate it. You gave us a lot of stuff to think about when it comes to Robinhood. If you guys want to follow Amir, there's his YouTube right there. He will be having that valuation video coming out probably in the next couple of days, and I will definitely
Tomorrow.
Okay. Perfect. Tomorrow. There it is. Next time you guys see us, we'll be live from San Francisco.
San Francisco.
Unless Tanner misses his flight, and that, you got to put a level of
Might be a little delayed.
Asterisk.
But if Tanner does, I asked Tanner, hey, do you want to do the market open with me at 5:45 from California? He was like, brother, I don't wake up.
I'm not even remotely going to be awake. Like,
It would be fun though if you wake up at 5:45, dude. That'd be like two guys at 5:45.
well, it's adjusted, so I probably will naturally wake up pretty early, but yeah.
All right. Well, it'll be fun. Should be a cool event, and we'll be reporting from the event itself. All right. Thank you, Amir. Thank you, everybody. We'll see you guys later this week. Bye, everyone.